I'll start off with PB Fintech because there is a block deal there. So $126 million worth of sell down to happen today. The floor price of the deal is at 1258 rupees per share, which is about a 6% discount. Now remember, the stock has gained ahead of that. We might well see a bit of a pullback in this one. In the case of Cipla viewers, though, remember the stock was down ahead of the promoters selling, and then when the selling got absorbed, well, the stock had a big rally. Not quite sure if the same happens with PB Fintech, but a 6% discount is not ordinary. You might well see this stock starting off slightly lower. If it gets absorbed well, then that might get covered. But yeah, be mindful of PB Fintech. If it starts off lower, you know why it's starting off lower. Move on to results, and a couple of them. Now, Sanghvi movers, the results were in line, largely in line. So no big changes. But the employee costs for the company were up 123%. And the reason why this happened is because the commission to directors increased from 1.5% of net profit to 3.5% of net profit. That's a large uptake in commission to directors. It's not something that minority investors take very well. The whole con call was around this, or you could argue almost the whole con call was around this. There apparently were no satisfactory answers. We'll of course try and get the management to come on air and talk about this. But if Sanghvi movers starts off lower, you should know why. There's already a bit of a downtick that has happened on account of this. Let's just wait and watch if there is more in store. The other one is Kaynes Tech. Very good set of numbers, much like Endurance, but a completely different set of business. But remember, at times when the EMS businesses aren't necessarily all of them delivering, Kaynes has delivered on almost all counts. So revenue is up 74% at 637 versus estimates of 608. So that's largely in line, maybe slightly higher. God bless you, Samina. Margins at 14.9% versus Bloomberg estimate of 14.8. So they have maintained those margins. And PAT, as a result of which, up 97% at 81 crores versus estimates of 64 crores. Now, Kaynes is a very expensive stock, viewers, and therefore it needs to deliver. But the fact remains that it has delivered on these numbers, and therefore very likely that the stock may be sanguine today. So prospects may be sanguine today. So watch out for this one.